Good morning, everyone. Welcome to the morning meet of IndiaNivesh. This is Mehul Kothari from the research desk. Today is 21st Jan 2020. Well, yesterday the week began on an optimistic note for the domestic markets, in line with the SGX Nifty. However, this moment was short-lived as we witnessed severe selling pressure from higher levels, which dragged the benchmarks to considerably lower levels. The index Nifty spot initially registered an all-time high of 12430 and nosedived more than 200 points from there to end the session with a loss of over 120 points. Meanwhile, the Nifty Bank Index lost more than 500 points from its previous close. The market breadth turned in the favor of declining counters as the day progressed with 631 advances versus 1174 declines. Now the breadth has turned negative on closing basis after 7 trading sessions. So this indicates selling pressure across the board yesterday. On the sectoral front, if we see apart from Nifty, Realty and Nifty FMCG, all the other group indices ended in red. Among the losers, the Nifty Media and Nifty PSU counters ended with deep losses. Coming to the derivatives part, surprisingly, in index futures, FI remained a bit bullish by adding fresh long positions. However, in index options, they remained bearish by writing call options and also buying put options at the same time. So in rupee terms, if you see FI bought index futures of around 134 crores, while in index options they were buyers of 272 crores. In cash, there was negligible buying by FIs of around 600 crores, 6 crores, while DIS sold equities worth 1420 crores. So basically, yesterday's price action of Nifty future was highly volatile with drop in open interest by 2%. Even the volumes were high, which indicates some long unwinding by the other participants, if not the FIIs. The premium of Nifty future is now at 38 points from 33 points. The PCR has now cooled down to 1.13 from the high of 1.66. So it is now at a comfortable level. As for the Nifty option chain data, the overall support now is at 12,200 strike because of 1.4 million shares and 12,200 strike put. However, the SGX Nifty indicates that we might open below 12,200. So the next support will be 12,100, which has an open interest of around 1 million shares. On the upside, if we see 12,300 could be a very strong resistance because at 12,300 strike call, we are witnessing an open interest of around 3 million shares, that is 30 lakh shares. So for this series, at least 12,000, this week expiry 12,300 could be a strong resistance. Coming to the technicals, yesterday Nifty registered an intraday high of 12,430 and then it dipped near to 12,200. So there is a huge bearish candle which has engulfed the gains of past 6 trading sessions. So going ahead, the low of yesterday will be a crucial one, that is 12,217. A breach of the same or a sustainability below the same could drag the index towards 12,130 mark, which is the next support. So this goes in line with the option chain data, that is 12,100 to 12,130 could be the support. There one can see one can look for an intraday buy because the structure of Nifty is still buy on dips. However, the bank Nifty has been underperforming and it's near breakdown point. The breakdown point for bank Nifty is 30,900. If that is breached on a closing basis, then we need to take a different call on the market altogether. But we'll have to wait for a closing of bank Nifty today. There is nothing specific on stock front today. So that's it from on the technical front. I'll hand it over to Mr. Dharmesh Kant. Thank you very much.
Yeah, good morning all. A quick update on the global markets. US market ended in a positive territory and it was though a marginal kind of a volatility was there, but the bias was to buying the corrections, and though the European counterpart had a negative bias in yesterday's trading session, currency crude remains where it is. They are stable as well as the bond yields are stable. So on the US 10-year bond yield, so nothing negative news flow emerging from there. But this morning, Asian markets are trading with deep cuts. Particularly, Hangsei index is down around 2 percentage point, and Nikkei is also trading with a deep cut. So that is having a rub-off effect on the Indian market. After yesterday's profit-taking session, today SGX Nifty is expected to open at least with a cut of half a percentage point. Kotak Bank reported the numbers yesterday. The numbers were, a mediocre set of numbers, nothing, very exciting out there. And their MD further went on to say that you can expect mid-teen kind of a growth this year. So high 20s growth to mid-teen is what he's talking about, and that corroborates again with in line of IndusInd Bank or HDFC Bank, where they have cited a slowdown in the retail growth. And retail was the thing which was carrying the market or the keeping the buoyancy intact for the markets to trade further up, and the hope that economy be on a revival mode. So now the things become a bit difficult after Kotak also following the suit of IndusInd and SDFC. To Axis and ICICI Bank will be reporting the numbers by this weekend, and then the entire private banking space more or less will be through with the numbers. Federal bank numbers were good. In fact, they had a pretty good set of numbers. So small banks have been reporting good set of numbers, but larger banks are citing problems in the economy. Today, I think this gap down which is there in the market can be used as a buying opportunity. Let's not forget that in spite of all the worries which are coming up, the expectation will be more on the government of India to deliver the guidelines of growth and how this retail slowdown can also be tackled when they table the budget, and more on a it's more on a structural or a macro picture kind of a basis which the markets will be looking into. Until that time, we don't expect a correction to be a very steep, or the expectation would be that corrections will be brought into. That is all from our end. This morning, if the correction is there, I think Mehul will be giving you the trading opportunities, and the sectors remain the same. I mean, banking space, particularly the public sector banks, and the metals, materials like cement are the key areas, and pharma. That's a third emerging space which is looking attractive. These are the areas where one can look for a buying opportunity. That is all for the day. Thank you so much. Have a nice day. Happy trading.